Why are Alibaba and Chinese peer stocks declining? The decline in Alibaba and Chinese peer stocks has been driven by a confluence of factors that have impacted market sentiment and raised concerns among investors. From the contraction of manufacturing in mainland China to worries about policy stimulus, weak overseas demand, inflation concerns, and geopolitical tensions, multiple elements have contributed to the downward trend. Understanding these reasons is crucial for investors seeking insights into the dynamics of Chinese markets. Manufacturing contraction. The recent decline is driven by the contraction of manufacturing in mainland China. A government report indicated that manufacturing activity in China contracted for the third consecutive month in June. This contraction raises concerns about the health of China's manufacturing sector, which is a significant contributor to the country's economy. Lack of significant policy stimulus. Investors are worried about the lack of significant policy stimulus measures to address the manufacturing contraction and revive economic growth. The absence of substantial policy actions by the Chinese government has heightened apprehension among market participants, leading to caution in their investment decisions. Weak overseas demand. Persistent weak demand from overseas markets has further contributed to the decline in Alibaba and Chinese peer stocks. China's manufacturing sector heavily relies on export markets, and weak global demand impacts the performance of Chinese companies involved in international trade. The ongoing global economic uncertainties and trade tensions have led to subdued overseas demand, negatively affecting Chinese manufacturers. Inflation concerns and potential tightening. Inflation worries have also impacted Alibaba and Chinese peer stocks. Prominent global central bankers have raised concerns about inflation and suggested the potential need for tightening measures to address it. Tighter monetary policies to control inflation can impact economic growth and investor sentiment. Such remarks from central bankers have added to the cautious market sentiment and influenced the decline in Chinese stocks. Geopolitical tensions and regulatory changes. Geopolitical tensions and regulatory changes can significantly impact Chinese stocks. Recent developments, such as the intensification of the US AI chip embargo on China, have contributed to the decline. These factors introduce uncertainties and potential disruptions to the operations and growth prospects of Chinese companies, leading to investor concerns and selling pressure in the market. Alibaba and Chinese peer stocks are experiencing a decline primarily due to the contraction of manufacturing, concerns over policy stimulus, weak overseas demand, inflation worries, and geopolitical tensions. The interplay of these factors has created an environment of caution and uncertainty among investors. As the Chinese market continues to evolve, it becomes essential for investors to closely monitor economic indicators, policy decisions, and global developments to make informed investment decisions.